Hey, what's up guys? This is Mario from A Trade of the Day, and in today's video I'm going to talk about the China tariffs, China possible retaliation, and trade war, and how that affects the stock market. Alright guys, let's get started. So there was an article in the Washington Post that kind of talks a little bit more about that and goes in more in depth of what that means and what's really going on. So as you guys can see, China slams Trump reckless and arrogant tariffs, warns of retaliation. So let's see what's really going on. So Trump threatened on Thursday to slap tariffs on up to $60 billion in Chinese imports, which it's a lot. And China announced a more modest package of potential tariffs of its own and vowed to fight to the end to defend its interests if a trade war breaks out. So definitely the possible retaliation is absolutely there. And again, why is a trade war such a big deal? The reason why it's a big deal is because when there's tariffs, products of goods are more expensive. And also, when there's tariffs, it kind of limits competition. It kind of messes with competition because it's more of a protectionist stance. But it's kind of good. It's bad for the consumer. Good for the companies in the country that's protecting their products, but bad for the consumers because the price of goods are all going to be more expensive, and also the cheaper ones are going to be less quality, because what competition does, it allows people to compete against each other globally for better products at cheaper prices. When there's free trade around the world, again, you're literally competing on price and on quality. And what tariffs do, it limits that competition because you have countries, either the U.S. or even China, who may produce their own, I guess you could say, cars or their own wine or their whatever the case may be, and might not be a good product, but it's cheaper compared to maybe some other quality cars, and for example, like in the United States or elsewhere, and that might be more expensive because of tariffs. So now you kind of mess with in terms of consumers, because consumers end up losing at the end, and also investors, because investors end up losing because tariffs cause companies to lose revenue. So how's the market reacting? So this is let me see, this is a 1 year chart of the stock market. Again, it's been trending pretty nicely. And the last 6 months, we did see a sell-off again in February. We did see a bounce, but then another sell-off. And again, this coincides with interest rate hikes, and also, again, all the tariff talk, which that was on Thursday, which was actually on this day. And then today, China announced a possibility of retaliation. So definitely the sell-off is there. If you look at the volatility index, the VIX, definitely VIX is going up. So we're going to see what happens. So it's definitely affected the stock market. As you guys can see, the market is down 2%, which again, every single sector in the S&P 500 is down. From energy all the way to financials is down. If you guys can see, XLE is energy. This is consumer staples, utilities, industrials, REITs, real estate investment trusts, biotech, some materials. This is consumer discretionary, healthcare, and this is even the Russell 2000 is down big time, 2%. The Nasdaq is down big time, 2%. And you can see the technology sector and the financial sector. So this definitely affected is across the board. Small cap, large cap, mid cap is definitely affecting everybody. So we're gonna see what happens. Right now, in a video that I did speak about the prior day, we're looking for if investors are gonna buy the dip. Our investors, institutional investors, the guys with the big money, fund managers, the billionaire investors, the big traders, hedge funds, are they gonna buy the dip? So that's what we're waiting for. And what I'm looking for in terms of the clue is if this level holds and we see another big buy, a big green candle, like a hammer candle, for a reversal. So That's what I'm looking for. So right now, all eyes are in the chart, and also all eyes are in the 200-day moving average. So I want to show you guys this 200-day moving average and see what it looks like, so you guys can take a look at it. So right now, it's touching the 200 moving average. So we're gonna see if this level holds. So Monday is gonna be a very, very important day, and it's gonna tell a lot of what the market's gonna do. So very, very, very important day, guys, on Monday, and we'll see what happens. Again, the sell-off could continue. You know, investors want to pull out of the market and get out because of the trade war possibility, and they don't want to, you know, have any exposure to that risk. We'll see that on Monday. You know, and investors want to buy the dip, we'll see that as well. So we'll see what happens, guys. So far, again, is all about the price action. Is all about reading the price action, the volume, the candlesticks, and we're gonna see what happens. So hopefully you guys learned something, guys. Again, we'll see on Monday what really happens, and then from there we'll decide if what's the best move. So hey, have a good weekend, guys. Talk to you guys soon.